Alright, so with this video, I just want to break down each of my stocks and how much they pay per share. I've never done it this way before. It's been a while since I've gone over my stocks. So I just wanted to give an overview of it. So without further ado, so here's the overview of my stocks. The first 5 are monthly dividend stocks. The rest are quarterly. And there's one yearly, I think, in there, THCX. Now, like I said on my other video, some of the dividends have gone down, SPHD and SPYD. The dividends have dropped a little bit for those. Also, I use MarketBeat a lot to research my stocks, and they're not always up to date on their dividends, dividend payments and things like that. So just bear that in mind. Also, ET has dropped their dividend payment from 30 cents to 15 cents during last year. That has not gone up yet, but it's still a decent dividend for what the stock is. The stock price has gone up. Just to give you a little bit of an idea, like ERC, I have 57 shares, and it pays me $4.70 every month. DX, got like 57 shares of that as well. That pays me $5.20 per month. And then looking down at maybe ABR, that pays me $14.96 every 3 months. Got 44 shares of that. THCX, a little bit of an anomaly. They just started paying dividends. So MarketBeat shows 20 cents annually, which I'm not sure is correct. It's actually 0.003 cents, and I do think that's annually. In July, I just got a 4 cents payment on approximately 10 or 11 stocks. I can show you here, it's right in the middle there. THCX dividends, 4 cents on 7/1. And I've had the stock since January, February. Now, why do I have the stock, you may ask? It's not a great dividend payment, but I do like the stock. It's a cannabis ETF stock. I think the cannabis industry is, as it's becoming legal in other states, it's just in its infancy, and I think it's just going to go up. I don't see it going down at all. THCX, they just came out around middle of 2019. You can click down here, see all their holdings. It's an ETF that contains all these stocks. They invest in all these stocks. So you don't have to invest in just one particular cannabis stock. And it shows their percentages, percent of the fund for each one. So this is one I'm going to hold on to. I'm not going to put too much, I'm not going to dump too much into it. I'm just going to buy here and there when it dips down. Now, as far as Triple Point, I'm going to be selling that off here. Their profits haven't been too great lately, and the stock's up. So I'm looking to replace that with another stock. I'm looking at BEP. Now, of course, like I said, MarketBeat shows 58 cents annual dividend. If you look at the payouts on MarketBeat, they're 30 cents per quarter. So it's more like $1.20 per year. So this is more like into a clean energy type stock. It would be good to diversify my portfolio a little bit with this. The other one I was looking at is RWT, and that's another REIT, real estate stock. Paying about 18 cents per share. So of course, since 2020, the stock dividend has dropped a little bit. Quite a few stocks have done this, but it looks like it's coming back up. They just had an increase on 6/10/2021 of 2 cents. So it's 18 cents per share right now. And the CFO of Redwood just bought $250,000 worth of the stock. So maybe that's a drop in the bucket for him. I'm not sure, but if we go over here and look at the chart on Webull, now it's a little condensed on my iPad, but that dip there right at the end, that's 2020, where everything fell, and then you see the red going up. So they have not fully recovered to their normal stock price yet. It's close, but I think they still have some growth there. So Redwood is out of California, right on the coast. They deal with residential, business, multifamily investments. The question is, am I overweighted in REITs? RQI is a REIT, DX is a REIT, STAG is an industrial REIT, OHI is a healthcare old folks home REIT, ABR is a REIT. So probably over half, almost half of my stocks are REITs. Now, real estate stocks don't follow the same pattern as regular stocks because you're not investing in a business that relies on the economy. Real estate is a little bit separate from that. They also have to pay out around 90% of their profit as dividends by law. So you're going to have a little bit of a higher dividend payment. And also, they're going to have less money to work with. So they're going to make more decisive decisions on the little bit of money, the little bit of profit that they make, rather than, say, Coca-Cola that has less of a dividend payment, so they have more money to work with, and they just throw it to advertising or something that maybe doesn't work for them. They're a little more risky with their money, or they can be a little more risky with their money. As far as the REITs, I've done really well with the REITs. They're all up, except for DX dropped down a little bit. I am diversified, where one's an industrial, one's just dealing with apartments. Another one's just dealing with more or less business properties. So I do have diversity within my REITs. So I really don't think it's a bad thing. I think I'm going to lean towards RWT, although I'd like to add maybe something else to my portfolio to balance it out. Maybe something in pharmaceutical, maybe another energy stock. I only have one energy stock. It takes a little bit of time. It's kind of hard to find a good stock with a good dividend payment that's solid. WT has been in business since 1994. So that's why I'm leaning a little bit towards that. It's a well-established real estate company. So if anyone has any thoughts on what I should add, just put it in the comments. And I realize I'm not getting a lot of viewers on these videos, but I'm trying to put these out, trying to help people with investing, making investing choices. And obviously these are my personal choices. It's not financial advice, but I've done pretty well with it so far. So thanks for watching and tuning in. Until next time. I only invest in THC as a stock.